Hi, Michael. Good to see you.
Hey Olga, how you going?
Good, thanks. So we thought today we would have a chat about payment plans because I know that most of the clients and referrers that I'm speaking to at the moment, it's the hot topic, and I'm assuming that you're finding exactly the same.
100%.
One of, I think, the most important things that I often talk about when we're looking at payment plans is it's not one size fits all. It's not cookie cutter. It's not just let's divide the debt by 6 months and that's what you have to pay. And the other really important thing I'm talking to people as well at the moment is that you don't have to pay an upfront amount. A lot of people are finding that when the ATO are calling them, they're demanding 20 to 40% upfront, and that puts huge strain on businesses' cash flow, and that's not something, as we both know, that we agree to or that we put into our plans.
Yeah, look, 100%. And I think the thing too is that what a lot of people aren't realising is that the ATO, well, certainly from the ATO's perspective, they see that we're in a post-pandemic period. But we know as people in business that businesses are certainly not through the pandemic. Yes, health-wise, there may be things are changing, but they can't get supplies, they can't get staff, they can't get a whole range of things. And so certainly what we're seeing is that the ATO are treating it as though it's business as usual now. And you're right, they're really expecting businesses to, I guess, agree to payment plans that just are not viable in the current environment for them. So they can't afford the payment terms. And I guess that's where we're coming in and having to go back to the ATO on their behalf and say, look, I know that's what the computer is saying that this taxpayer should do, but really, this business, it's not viable to do it that way, but it is viable if we do it this way, and we're getting those outcomes for them.
Yeah, and one example of a business that I've been helping at the moment, they've got a number of different entities, but one of them is a pub in Healesville in Victoria, and then they've also got a couple of other companies trading around that as well. And as we know, hospitality has been massively affected. They've been affected with staff. The owner's actually working behind the bar all hours of the day and night, so she's not actually working in the business, and they've got behind. They were hoping to get some funding, so what we've been doing is working with the broker, and they also had a number of their returns outstanding because, like a lot of people, they sort of thought if they ignored the debt and they didn't lodge and they didn't have to worry about it, then the ATO wouldn't come after them. But what actually happened on that instance is they received director penalty notices. The debt was around $250,000. The directors received director penalty notices, and we came in towards the end. There was only 2 days left when we were engaged to have a look at it and see what we were able to help with. What we've been doing on that one is working in parallel. So we're in our lane, the accountants are in their lane getting all of the lodgements up to date, and they've also been working with brokers to secure some funding because they've got about 4 other entities that have also got outstanding returns. What the interesting thing is, and the scary thing I think of that's happened on that one as well, is while they were deciding what to do and while they were starting to talk to us, within a week after those director penalty notices expired, statutory demands were issued. So the ATO actually started the wind-up proceeding.
Wow.
And even though $250,000 is still a lot of money for people, in the scheme of things, it's quite a low amount to see the ATO aggressively chasing again. And as you know, we haven't seen that for a long time. So what we were able to do is in a week, we were able to get them into an affordable payment plan with very small payments to start with. And we were also able to knock $70,000 off that debt, which was the interest and penalties. With their 3 other entities, we were then working on those to get them into long payment plans. We've got those into 3-year payment plans. We're able to get rid of all the interest and penalties. And because they're now compliant, the broker was also able to get them funding, which has given them some breathing space and some money, not to pay up to the ATO, but to give them some breathing space for their suppliers and other things whilst they're getting back on track.
That's a great result, isn't it? Well done.
Yeah,
well done.
absolutely.
Yeah, look, it's interesting, the whole director penalty thing, and I think we'll have to do a whole talk on that because it's so important at the moment. But It's certainly impacted one of the clients that I saw last week that they're a commercial cleaning company based in Western Sydney, and interestingly, the director had purchased the business just before COVID, not knowing that COVID was obviously on the horizon. A lot of the work and a lot of the contracts that they had in that business were with gyms. And you can imagine when we had all the lockdowns and everything, gyms closed, a lot of their other clients closed. And so what it meant was is that they just virtually went from a new business to no work, no income overnight. They struggled through and kept a lot of their staff on, but they couldn't keep all of the staff on. And in many ways, that probably hurt them, because if they'd have let people go earlier, then maybe the debt to the ATO wouldn't have been where it was. But they were trying to do the right thing, and also recognising that their staff had mortgages to pay, and they were caught up in the whole thing. But the end of it, when we sort of came out the other side, was that they had a $450,000 tax debt. They'd lost about half of their staff. Ironically, now there's plenty of work out there, and they've got lots of opportunity. Now not able to get staff. So, and then what really prompted some activity from them is they got one of the warning letters about a director penalty notice to make the director personally liable for basically all of the debt, because it was all sort of that type of debt. And obviously the director panicked, spoke to his accountant. His accountant said, well, look, this is beyond us. We don't know what to do with this. They went and saw an insolvency practitioner in Western Sydney. The good thing about it was the insolvency practitioner knew us and said, look, other than the ATO, your business is solid. And we really think that, you don't need to go through an insolvency event. So they sent them to us, and within a couple of weeks we had them into a long-term plan. We got about $130,000 remitted for them, and that made a huge difference in the numbers for them and their ability to be able to meet the payments. No DPN has been issued, obviously, because they're compliant and they're doing what the commissioner wants them to do. But that could have been one that could have gone very easily down the other track and ended up in the hands of a liquidator. So so really happy with that.
Yeah, I think that's a really good point, is a lot of these businesses are not bad businesses. They are viable. And the pandemic didn't finish last year. So even though we haven't faced lockdowns in the sense that we had experienced in the last 2 years, this year, like you just said, with staff shortages, with supply shortages, businesses have still felt that pinch. And the biggest thing is there is a solution that's not cookie cutter to give them the breathing space when they do have a good viable business. And it's those payment plans and getting them into the right position, I think, that is just invaluable. And payment plans as well that match their cash flow.
Yeah, I think that's a really good point, Olga, because what we're seeing every day is they say, look, I've had 3 this week. We've been to the ATO. We've been negotiating with them, either the director personally or via their accountant. And the ATO have come back and said, this is what we'll do for you. But it's just not viable. It's just not sustainable, and unfortunately, many businesses say, well, that's it. And they agree to that. And then the next BAS comes along and they have got no funds to pay the BAS, and they default, and the position gets worse. Whereas, in these ones, I would say, look, I know that's what the ATO are saying to you, but that's our job to go to the ATO and say, look, I know that's what your system says, but we believe there is an outcome for the commissioner that's in a time frame that's acceptable. And that's what we do. We sell that to them, and virtually every time they agree with that.
Yeah, absolutely. And there's no point getting into a payment plan that they can't afford. It just adds another stress. And a lot of people, I think, forget you have to have enough in reserves to pay your ongoing liabilities. And if those ongoing liabilities aren't paid on time, then that can cause more problems as well. So the key is actually to help businesses, and not just a quick Band-Aid. Like, people agree, it's scary. I actually spoke to a neurosurgeon last week who has quite a significant debt, because he wasn't allowed to work for 2 years, which still blows my mind that neurosurgery is considered elective. Now, he cuts brains open for a living, and he told me how freaked out he was when he received the letter from the ATO. And I said, 100% hand on my heart, I can fix this for you. We can absolutely help. But these letters are scary. And when you get a call from someone like the ATO and you don't know that there are specialists that can step in for you and do those negotiations for you and get an outcome that you need, he is a very viable person. He is not a bad individual. He's not trying to scam the system. He's had a hard 2 years like the rest of us, and he does a huge amount of good for society, and he just needs some time, and he needs a plan that suits what he needs at the moment.
It's interesting, because the two things, probably the main thing that's really creating difficulties for businesses is that requirement for the upfront. And we had one that came in a couple of weeks ago, and it was a commercial air conditioning company. And again, affected by COVID, affected by supply chain, affected by staffing, affected by all the things that a lot of these commercial businesses are dealing with. Unfortunately, they'd already been through a round with the ATO, and the director had borrowed the remaining equity on his home to pay an upfront. Well, roll forward 3 months, they couldn't pay their ongoing payments and everything, and they had nothing in reserve to do that. So again, luckily the accountant knew about us and sort of sent them to us. And again, we were able to get around that requirement, go back to the ATO and say there's nothing in the kitty. And quite frankly, if we'd have seen them first time around, we wouldn't have allowed the director to, to basically put his home on the line for a commercial business when it wasn't necessary. So, but again, they're now in a long-term plan. We've knocked about 30% of the debt off, which has, again, made a huge difference to their cash flow. And they can sleep at night and get on with business.
Another thing I think that's really important, some people don't understand as well, that if you're already in a plan, so if you have agreed to one of these plans because you felt like there was no other option, without it defaulting, we can actually renegotiate a better plan. So we also helped another Victorian business that they had about $250,000 in debt, and they were paying $5,000 a week. Now that $5,000 a week was putting a huge pressure on their business. So without defaulting, without not paying an ongoing, we actually renegotiated that plan down to $5,000 a month. So the difference in cash flow is a quarter of what they were outlaying in cash flow, which has taken this huge pressure off them. And at the same time, we were able to knock $70,000 off that debt. So, and we can do that as well at the beginning. So I hear people say to me all the time, oh, well, we can't get rid of the interest and penalties until all the core debt is paid. Whereas, as you said, we know what we're doing. We're the specialists, so we do that at the beginning. So between that and reducing the payments by a quarter, it's just the amount it's helped this business with their cash flow is just huge.
Massive. The other thing too, and I don't know if you're seeing this, but just the scale of some of the debts. We're getting sort of multi-million-dollar debts, and we had one came in probably 2 weeks ago now. It was large labour hire company in Queensland. And an interesting story because they'd only recently bought the business, and it turned out there was something hiding in the business that they weren't aware of, and it was a $4 million superannuation debt that was brought about by the fact that they'd been a few days late every month in making their payments, and so therefore the ATO then calculates the way they calculate the superannuation on actual wages rather than normal wages, which actually added $4 million to their bill. Wow. The directors, in good faith, found out this, made a voluntary disclosure, and the ATO were very grateful around that, then sent it to the debt section, and the first thing the debt section did is issued $4 million in director penalty notices to these directors. They were a little surprised. They didn't impose penalties, but which is what was part of the agreement, but the director penalty notices certainly obviously created some angst at their end. That was one too where I think the case officer had reached a point where they were running out of patience with the company, and so we engaged initially with the case officer, and then when we were getting nowhere there, and we don't do this very often, but where we need to, we have that ability, as you know, to escalate, and we escalated the matter to an assistant director who was then able to take control of the matter, and we've now managed to get that business out the other side. The directors are safe from the director penalty notices. The company's in a long-term viable payment plan. There's some capital that's being raised to help with that. And but it's a bit tricky. And I kind of understand sometimes why, the accountants who are dealing with this, when they reach a point where we reached a point where we were getting nowhere with that case officer. And so we need to escalate. And that's one of the benefits, certainly, in terms of being able to do that, is we can get, a fresh look at it and get an outcome that makes sense rather than putting another business under.
Yeah, where I'm seeing sort of level of debt. I think we used to see the debt pre-COVID, an average debt might be around $300,000 for a business, whereas now we're seeing, I suppose, an average debt $800,000 or $900,000, which makes sense because you've had 2 years where people felt like they could ignore the ATO, they didn't have to pay it back. I think what people didn't understand during that period of time is it wasn't going to disappear. It's compounded, and now it's all immediately due. So you've got 2 or 3 years of liabilities that have built up and accumulated, and now it's like bang, it's the full amount is due and payable, plus you have to keep paying your ongoings. And so the pressure and the realization of that is huge. And I think sometimes, like a lot of problems in life, the hardest step is going, okay, I need help, and then who can help me, and then reaching out and get that help. And I'm sure you see it all the time. I know I do when we meet with clients, the look of relief on their face, or you can hear it over the phone in their voice. Oh my God, thank goodness that someone can now help me. You know exactly what I'm going through. You know what to do. It's all yours. Please help and just fix it. And that relief is massive.
Yeah, and look, and just following on from that, I think the big thing too is if you look in the press every day, there's something in the press about the ATOs going hard on people on recovering debts, that the debt's blown out from 20 billion to 60 billion dollars in debt, and so on. I think the message that's not getting out there, which needs to get out there, is that there is a silver lining, and that is that the ATO will work with businesses and will, as long as the business engages and gets on the front foot and doesn't wait for the ATO to come banging on the door, and also engages in the right way. And sometimes that may need the assistance of an accountant or another advisor, or specialist advisors like ourselves. But if you do that, then the ATO will work with businesses, because they do recognise that times are tough and times have been tough, and they want businesses to continue.
I think there's a misunderstanding by a lot of people. They don't want to poke the bear, that if I engage, or if we engage, which is completely wrong, but if someone talks to the ATO and rings them and says, okay, we need to fix this, we need to come up with a plan, they get quite scared and think, oh, you're going to make it worse. Don't poke the bear. Don't tell them. If I haven't heard from them, it's much better to not tell them, which is just not correct. 100%, it's not correct at all. You're always better. You have to proactively engage. And I think that's something during COVID as well. The messaging from the ATO was, we're here to help you. The thing that I think the part of the message that got missed is, we're here to help you if you proactively contact us. So if you didn't proactively contact the ATO, and if you ignored the ATO debt, they're now classifying that debt as 3-year-old debt. And as you know, we have to proactively put an application around how COVID affected the business, because COVID's now considered a natural disaster by the ATO. And so without that proactive engagement, then nothing good will happen. It's like a ticking time bomb, that you will get a knock on the door, or there will be a director penalty notice, or there will be wind-up proceedings, or you will be reported to a credit reporting agency. Whereas if you actually get onto it before any of those bad things happen, you're not poking the bear, you're placating the bear, for want of a better term, and we can get you into a much better arrangement. But the flip side of that is, someone said to me last week, is it too late? I'm like, no, it's never too late.
No.
That's what we do. And I think too, the unique difference with us is we're not anymore, but in our old life, we were lawyers. And so we are used to dealing with these sorts of things, and it is never too late. We can jump into action very quickly. And even if there are director penalty notices or these really scary things, there are solutions and we can fix it. And often it can be fixed within 3 weeks. It gets fixed very, very quickly for people in a number of circumstances. And I think that's important to know, that there are solutions there.
It's interesting too, because I think one of the things that's certainly driving a lot of accountants to contact me is that during COVID, it was easy. You basically, if you could spell the word COVID, then you would get a payment plan of some form, and that was great. And then even prior to COVID, what the ATO were requiring was much less. But now the ATO are back to full, I guess what we would call full recovery mode. And what that means is, for many of the businesses that we're seeing, it's not just enough to go into the portal, put in a proposal and say, look, this is the debt, we'll pay it off at this amount. The ATO are now requiring, for many of the businesses, full financials, because they need to actually not only prove that the business can actually afford to pay the payment plan, but that the business is actually viable. Because if it's not, they've got a public policy whereby they can't be seen to be supporting insolvent or non-viable businesses. So there's a lot more work to be done to get a payment plan or a remission application, which we'll talk about in another time. But to get those over the line is much harder now, because the case officers at the ATO have more boxes that they need to tick.
I think, though, that most of the businesses we do see are viable, and it's so important to be able to show that. They just need some space. They just need time for what's happened in the last couple of years.
Yeah, well, and it's funny, it's kind of weird to be talking about pre-pandemic, because it feels like a million years ago. But I remember when the ATO was really hitting the wind-ups prior to COVID, And we were seeing the stats, and we were getting the stats out of the ATO of the number of those businesses where they actually defended it. And it was frightening that the number that didn't defend, and it was something like around 70% were not being defended. We know through our own dealings that about 95+% of the businesses that we see do not need to go through an insolvency event. So the number of businesses that would have been wound up unnecessarily during that period is really quite upsetting, and would cause a lot of heartache and angst and financial impact on a lot of directors and their families. So I think that's only going to be exacerbated post-pandemic because the debt levels, as we know, are so much higher. So it's good at least to be able to at least assist some businesses and some families to avoid that process. So Olga, obviously we're a referral-based business, and we receive referrals from accountants, lawyers, brokers, and business advisors of all sorts. What would you say to one of those that maybe has a client at the moment that has a tax debt that they just don't know what to do with?
I've probably got two messages. One, for the ones that think that no one's come knocking on the door, that you should actually act now. It is much better to be in a compliant position now. The only way to protect a director from personal liability at the moment is not just talking to the ATO, but being in a compliant position and a compliant payment plan. And then my second message would be, it's not too late. We can absolutely help, even if you feel like it's gone too far or you've tried to get a payment plan with the ATO and haven't been able to be successful. We can still jump in. It doesn't mean that the person who's referring it is not brilliant at their job. Sometimes I refer it to us a bit like if you smash your knee, your GP might not be able to fix your smashed knee. But if your GP refers you to a specialist that only works on knees, you're going to love your GP forever. So we'll just come in, fix the knee, and then we're gone again. So please, I wouldn't ignore it. It's too scary, I think, the ramifications of how serious it can be, that we're here to help and proactively deal with it now.
Yeah, perfect. Well said. I think that's the point, is that we're part of the team. We work with the existing advisors to get an outcome for the client. We haven't had a client yet that we haven't been able to help, and I don't anticipate we'll be seeing those in the future. Look, that's great. And for people who are watching this, I hope you enjoyed this. I hope that you got some value out of it. Olga and I will be doing more of these moving forward and really touching on some of the other quite specific areas that are topical with the ATO at the moment in the debt area. So we look forward to seeing you all again soon.